in the February production numbers, oil production was anticipated to drop again significantly, and yet it only dropped less than 0.5%, or just slightly over 4,000 barrels a day. And gas production actually increased 3%. I think that's reflective, again, of continued tighter and tighter focus on the core area. I had the opportunity this week to tour all of that area and some of the outlying areas. And so it was very noticeable, the slow to no activity if you got outside the core area, and also very noticeable in the area that we went to around Johnson Corner. There were frac crews, there were flowback crews, there were workover rigs, there were drilling rigs, there were new pads constructed and well stakes, and quite a bit of activity, but in a relatively small area. I think the explanation for the slight drop in production, I'm calling this month's director's cut cash is king. And basically what we saw happening was the need for some cash flow and some production by some operators. So even in speaking to the Train ND people in Williston, they had 2 frac crews come through and get trained the first part of February and then get deployed to the field. So industry added 2 entire frac crews in February and went out and completed some wells, which really we didn't expect that to happen. So we saw the non-completed wells drop by 38. We also saw some expanded capacity for gas capture, and I think that allowed companies to open up some wells and produce some wells probably at a higher rate than what we would have anticipated. So 2 new frac crews, 38 non-completed wells completed, increased gas capture capacity. And then on the other side of the coin, we've seen over 700 wells go inactive since December. But it would appear that the bulk of that is happening in what we call the conventional wells, wells that were producing from legacy formations, and the economics just don't support repairs and ongoing production at these oil prices. So when we look into that a little bit, we saw an increased percentage of Bakken Three Forks wells, unconventional wells versus conventional wells. Saw that jump to 84% of our wells are now unconventional Bakken, and that count, 10,898 active wells, is actually up, whereas the count of the other types of wells is down. Permitting has really slowed down. March being the slowest month that we've had since 2009. So you got to go back 7 years now. I don't have monthly statistics for the year 2009, so I can't pinpoint for you the month in 2009, but even the annual average back then was right at what we saw in March of this year, so the lowest in 7 years. When we look at oil prices, a little bit of improvement. Looks like we got 5 days of 40-plus WTI under our belt, only 85 to go before companies are encouraged to stop the inactive well business and start reactivating those wells. And so it's still going to be a difficult second quarter for industry. Rig count fell to 29 today. We're still looking at the possibility of 1 to 4 more rigs being idled or contracts canceled. And so it's looking more and more like we're going to stay in that 25 to 30 range until we see some significant price improvement. When we look at non-completed wells, like I said, 907, that was a surprise for that to actually decline 38. I think we were anticipating an increase. On the other hand, saw a big jump in the inactive well count. And I want to point out that inactive well count includes all well types. And so it's not all oil and gas, or it's not all oil producers. Only about 1,100 of those are oil producers. About 80 of them are gas wells, and 270 in that neighborhood are what we call service wells. That'd be a well that is a saltwater disposal or enhanced oil recovery injector or something like that. Prices are anticipated to stay low for a while longer. next week, of course, is OPEC's meeting with Russia, and they're going to discuss a price freeze, but Iran doesn't seem particularly interested in that. Iran has been growing its oil market in India. And I think one of the things I'm going to be talking about as we go forward, I'm hearing more and more out of the industry that India is the new China. China has announced that it's kind of stabilized its growth rate at half of what it was in most recent years, and that by 2020, that may drop by half again. But people are looking at the economy in India and seeing that they are right about where China was 15 years ago in terms of population, increasing demand for automobiles and road construction and that sort of thing. So that'll be really the thing to watch. A lot of people are beginning to think that India is the new China. And so that'll be a key parameter to watch on the demand side. On the trust land side, production dropped twice as much as it did statewide. So when I say trust land, reservation lands, Fort Berthold production dropped twice as much as the statewide production dropped. So very significant slowdown in activity there. It looks like that rig count has dropped to just those rigs that have drilling commitments in order to sustain leases and hold leases. And so we're down to 4 active drilling rigs, none on fee lands and 4 on trust lands. And I think that's what you're seeing is it's going to take 4 drilling rigs to meet those drilling commitments. I notice I said seismic activity is up. I'm not sure that's quite the right term for it. There is activity, but it looks like folks have suspended some of that activity right now just because it's spring planting time and the frost is coming out and all of that. So there's permits and there's activity in the seismic area, but it's all kind of under suspension right now until things warm up and dry out a little bit. Great news in the gas capture area, 89% gas capture. I don't know that we'll be able to hold that number. If we see a price increase to above $50 a barrel and people really go after the non-completed wells, we'll see some reversal in it, excuse me, in that trend. But I think, as we look into the February, March numbers, we may actually increase that gas capture number a little bit in the near term. But I think once we see some stronger oil price signals and we see inactive wells going back on and non-completed wells being completed, that we may back up a little bit from that number. When we get to the federal regulatory activity pages, there is just so much going on that I've tried to highlight some things. And what I've done is I've put anticipated or ongoing state activities in bold. And then if something has changed, I've bolded and underlined it so that we can focus on just what's changing. EPA, of course, has announced a new initiative to reduce methane emissions. But the way they're going about it is to start with an information collection request. They call those things Section 114s and putting that out. So those can take quite a bit of time. I think what that means is we're not likely to see a proposed rule during this administration. I think we're going to see one, but I think it's indicating that it's not likely to come out before that kind of October 1 deadline for this administration to propose rules. So it's a little bit on the go slow on that area. BLM, of course, extended their comment period on their venting flaring rule to April 22nd, so you still have some time to put comments in if you want to. And then on hydraulic fracturing, it was requested and granted by the 10th Circuit a 30-day extension to filing of briefs. And I think that really illustrates what happens once these things enter the litigation arena. They start to work around clerks and judges' schedules and requests for briefing extensions, and those are often granted, and things really slow down. So nothing to report there except that there was a 30-day extension granted. when we look at kind of back to the theme, cash is king, I came across the table of, let me see, I can't remember how many are in here, but I think it's about 50 or 60 U.S. oil and gas producers. 15 of them are significant players in North Dakota. Out of that 15, 11 of them lost money the fourth quarter of 2015, and 4 of them made money. And so I think what you're looking at is a lot of stress, a lot of economic stress, and that's why it's become really hard to predict on a month-to-month basis just what's going to happen to production and to well completions and to inactive wells. We would expect at these prices that things would, production would continue to decline pretty rapidly, and non-completed wells would continue to go up significantly, as would inactive wells. But under the economic stresses that the companies are seeing, sometimes they do things like February. It was a nicer than normal February in North Dakota, so they trained a couple of frac crews and deployed them to the field and actually stabilized production because they needed some cash. So I'm going with cash is king.
Okay, well,
we'll take some questions.
Yeah, the first question from the webinar will piggyback off of that last statement. Do you expect weaker producers in the back end to pull out and go bankrupt if prices go below 50, stay below 50?
We do, in fact. I went through the list this morning. One of the things is we're down, I should say, I don't know if you can call it down, to 361 wells that are in the merger and acquisition category. I know that's down from 700. That's only because the big Oxy sale to Lime Rock went through. And so that should have reduced our number to below 300, but we saw another 60 to 70 wells go on that list. So we're seeing a lot of merger and acquisition activity. We're now at, I count 5 companies, 6 if you go back a little bit into 2015, that have gone bankrupt, small companies, and there are 2 more that really are hanging on. They're right on the edge. So I still think that as we work our way through the second quarter and we hit that June debt redetermination deadline, and we're going to have 2 or 3 more. And so that's going to generate some merger and acquisition opportunities. A little bit surprising, but maybe not entirely, that there appears to be lots of money out there sitting on the sidelines waiting for those opportunities. In fact, the company that I talked about that made the Oxy acquisition has, another fund that they're putting together.
Can you clarify the list of producers you mentioned? Is it the 50 to 60 biggest producers, or biggest independents, or biggest producers, 15 biggest producers in North Dakota? What does that list entail, or can we send them to that list somewhere?
Yeah, I think we could send them. It's published in the April 11th Oil and Gas Journal. And I should have counted the total number of companies in the list, but it includes majors as well as large independents. It even includes Tesoro Corporation, a refiner, and Enbridge, a pipeliner. Put a smile on my face to see that Tesoro made money, and so did Enbridge. And so you can kind of see the difference in the industry sectors and how low oil prices play out. So you look at these low oil prices, and out of the producer category, 11 out of 15 lost money. Out of the midstream or transmission and refining, it was all profitable. So that's kind of exciting. But that's the list I'm working off of. I didn't count the total number, but I did go through there and mark the ones that are North Dakota, active in North Dakota, and there were 15 out of that total list that were active in North Dakota. 11 of them lost money, and 4 made a small profit.
Anybody? Because I got one on the webinar. Okay. Let's talk about gas capture. How was industry able to increase gas capture in February?
Yeah, question was gas capture, and the key factor there is that Lonesome Creek came online. And so One Oak's big Lonesome Creek plant was beginning to come online in December. They were still working on it in January, but it was up to full capacity. So it's able to process 200 million a day. It's not full yet at this point. So there is some additional capacity there. And in conjunction with that, the nice weather, there was some work to bring some compression, field compression on. So the key there was Lonesome Creek. The great news is that there are two more plants scheduled to come on yet this year, Bear Creek and Wild Basin, and those are both 80 million a day plants. So, that was the one area, in and around those two gas plants where we saw significant flaring. Every place else, the flares were down to a little bit of nothing. So.
Just curiosity then, when those two come online, how many processing plants will we have in it?
Oh boy.
Justin will have that for sure.
Yes, let's hold that one for Justin. I don't know off the top of my head,
It's going to
but
be more than 20, I would think.
it's a large number.
Yeah,
Yes.
more than 20.
Let's make sure we ask Justin.
He keeps Justin keeps a nice table on his website that shows and when plants are estimated to come online and what their capacity is and what the state's total capacity would be. So I know he probably knows that off the top of his head.
And I know there are two additional plants that have been put on the back burner, kind of tentatively scheduled for 2018, 2019, if prices and drilling improve and increase. So there's some additional capacity, even kind of sitting on the back burner that's been engineered, but they're not doing any expenditures for them.
Okay, a bit of a speculative question here, but if there were a substantial production drop in Texas and North Dakota, would that be a positive for prices going up?
Yes, I think so. When we look at U.S. production, U.S. is now an oil exporter and has somewhere in the neighborhood of 530 million barrels of oil in storage that's available for export. And so we now have the ability to reach out to Europe and to South America and Central America refiners and put crude oil into those refineries. So a drop in light sweet crude production in the United States would translate into a change in world supply, and it would be a positive for world oil prices.
Do you expect the inactive well count to continue to grow, or is it likely that the state will continue to provide extensions beyond 12 months until the price of oil recovers?
And the answer to both those questions would be yes. We are now entering what, if you're from North Dakota, you recognize as road restriction season. And so we're now seeing the frost coming out of the ground and load restrictions go on the county and state roads. It has become enormously expensive to move a workover rig or a drilling rig. And at these prices, people are just waiting. And those load restrictions always stay in place until after Mother's Day. Sometimes, depending on the spring that we get, I've seen them stay in place till Father's Day. So I really expect that both non-completed and inactive well counts will go up as we work through this. I had the chance to speak with a farmer yesterday, and I asked him if they were in the field yet up north of Minot. They're not. He was pulling some old fence line out, and he was seeing 1.5 feet of frost on the bottom of the fence posts. So we didn't have much snow cover. We had a little bit of cold weather, so there's still frost in the ground.
My brother-in-law's got wheat in, and he's moving on to beans already. They're a little farther south.
That's South Dakota.
Yeah, that's right. Any questions from the conference room? Any questions right there? It is. Okay. Ooh, it's a big one. It's a long one. So if there's any questions from the conference room, go ahead.
Let me get the last one.
Just quickly, I guess, so do you anticipate the price of oil per barrel to stay around this and potentially go up? And if it does, just to recap, it has to stay, WTI has to stay at around 40 for how long before more wells go on board?
Yeah, the question was anticipation around oil price, and then how long does it have to stay at the different price points. And it's been indicated to us by the investors that they want to see it stay above their price point for 90 days before they will start pooling their capital and investing it. So for inactive wells, that's a $40 price point. We need, another 6-8 weeks of plus $40 before they're going to start expending significant capital to return those wells to production. And for non-completed wells, it's $50. Now, to the harder part of the question, depending on what happens next week, oil price could stay at this level into the third or fourth quarter, maybe even the second quarter of next year. That's sort of the window that everyone sees for supply and demand, world supply and demand to come into balance. Is somewhere between the beginning of the fourth quarter of this year and the second quarter of next year. However, if there is an agreement next week, April 17th, they're meeting, if there's an agreement to freeze production and not keep adding additional production to this oversupplied market, that means that U.S. decline in production will really be the key factor, and we'll start to see price increases. So next week is a pivot point, and it could mean that we stay at these levels for an extended period of time, or it could mean that we start seeing price increases pretty quickly.
Okay, with the decline that we've seen so much smaller in the last few months, do you expect a continued maybe sideways decline or a resumption of larger declines?
Well, I'm kind of expecting some of each, but I really think that March and April, with load restrictions in place and the low level of activity, that we've still got 2 or 3 months of the larger declines built into the system. And so I'm really expecting us to go back to the December, January kind of declines for 2 or 3 months before we start the sideways movement.
Is there a danger we'll drop under 1 million barrels?
I think we still, there's a very good probability that by the end of the year, we're at 1 million barrels a day, and that first half of next year, we fall below that. Yeah, I think that's still a very realistic scenario. I haven't really thought about the probabilities on that, but it's pretty likely.
Okay, and I'll take these last 2 questions from the webinar, and then we'll wrap it up. Have you had any discussions about the export of Bakken crude? Apparently, a lot of crude is being exported from the Permian and Eagle Ford. So have you heard any discussions about if Bakken has left the U.S.?
I haven't heard anything specific. I've been involved in some discussions about that, and most of them have said that Bakken crude is not likely to be exported. It'll be Permian and South Texas crude that gets exported up until rail transport to the West Coast becomes a more significant factor. At that point, we could see some significant export volumes from Bakken crude.
Okay, and last question. We've been talking about inactive well count. Do you anticipate seeing wells being plugged and that number rise, or just more rising of the inactive well count?
Don't expect a lot of plugging of wells. I know that there's been some questions by policymakers in North Dakota about whether we should be giving inactive well extensions. I did some analysis for those folks and submitted it to them, and showed them that if we were to stop that, the expectation would be that a third of these wells would end up plugged. And maybe a third of them would end up temporary abandoned, and another third would be put back on production. And I think the consensus, if you would have it amongst the policymakers, is that we'd be driving the plugging of assets that we don't want to see go away. So no, I don't think so. I think we're going to continue the policy of granting inactive well waivers so that that doesn't happen.
And when you said 1/3 of the inactive, you meant the inactive well count?
Correct.
Okay.
Yeah, and that's a pretty substantial number. I can't remember the last year when we would have looked at plugging 500 wells. So that, you know, when you put that number out there and say that to retract the inactive well waivers might result in that, it certainly gets people's attention.
All right, Ben.
With the processing plants and gas and stuff like that, we produce a lot of gas and we also flare very little. Are we kind of at one of the most efficient times in our history in terms of natural gas?
Yeah, question was about, you know, are we hitting a very efficient point in terms of natural gas? I don't think we're quite there yet. When everything was very stable in the early 2000s in the state, we were flaring less than 5% of our natural gas. So I'm delighted by the increased efficiency, but we still got some significant work to do. Our goal really absolutely is to get that flaring back below 5%.
All righty. We will wrap up those comments and we'll make way for Mr. Kringstad.
Thanks.
Pull that table up. You know, count. I don't need to do it.
No, that's the question. I've got a table of all the gas plants.
Yeah, I mentioned that.
Right there? I don't have it committed to memory at this point. Count. Used to.
What? But there's just too many to count.
Too many numbers floating around in my head these days.
I'll pull it up.
My dad had 300 cows.
And you've got Lonesome and Lonesome Creek on here, right?
Yep.
Oh, but then go.
Yeah, we can take a look at that later. Well, good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. This morning, just want to quickly run through some of the key metrics that I watch and report on for the midstream industry. When we take a look at 2016 production, continued slides, obviously not only in North Dakota, but eastern Montana, as well as South Dakota, continuing production declines in those states as well. So the overall production in the system to be moved by pipeline or by rail has been down. For February, the estimates for overall crude movements relatively the same, within 1% of the January figures. Again, not any major shifts that we saw in the pricing markets and the production side, so it was to be expected that we didn't see any major shifts in the way the crude oil between those 2 months was moving. Historically, again, we did see the crossover late last year of more crude oil moving on the pipeline network versus on the rail network, again, primarily market-driven. We're continuing to see the WTI spread sub $2, hovering right around $2 here recently, and that has been impacting then those decisions on where to market those barrels. So we have seen the overall crude by rail decline, hovering right around 500,000 barrels per day, estimated to be leaving the state in February on the rail system. Again, majority of that, no major shifts in the destinations. We've seen consistent pricing in the different pad districts of the U.S. and what those refiners in those different areas are willing to pay for that crude oil. So again, the East Coast continuing to take a bulk of North Dakota's crude oil by rail, followed up by Pad 5, which is the west coast of the U.S. Again, just a snapshot. This is the most recent pricing of what those refiners were paying in those different regions. Again, the highest on the East Coast, followed by the West Coast, and then the Gulf. And where we were yesterday afternoon, these prices have shifted slightly this morning, down a little bit the last time I checked, but again, just over $2 spread between that Brent WTI pricing indicator. So again, nothing that would flag to me any type of major shift in the way these barrels are being moved out of the region here, at least in the near term. One big shift that we did see was the amount of truck traffic across the U.S. border with Canada. You see on the right-hand side of this slide a significant decrease in the amount of crude coming into North Dakota, coming into the system. And so over 30,000 barrel a day shift between January and February. I don't have an explanation at this time. I just got those numbers yesterday afternoon. And so we'll try and make some sense of that if we can. But again, those are additional barrels that did not have to move on the pipeline system in the region or the rail system. And so that is what drives me to watch these numbers, is because it dictates how many barrels are in the system that have to be moved either by pipe or rail out of the region. On the gas flaring side, you heard from Lynn as far as what the overall gas capture, breaking that down a step further, continuing to see 3% of the gas being flared from the wells that simply do not have a pipeline connection. And then we saw the decrease from January to February in that orange slice of the pie. So again, getting after those wells that are connected, trying to enhance the system, get additional compression, get additional lines in the ground in order to get additional gas from the wells that were constrained, get that gas moved to the plants so it can be processed and moved to market. And then last but not least, on the well connections, again, keeping up with the pace of drilling, hovering right around the same, the number of producing wells and the number of wells selling gas hand in hand in the month of February. So with that, I'd be glad to answer any questions.
Well, I might as well pose again. Do you know offhand how many gas plants we have?
It's over 20.
That's what I said. I pulled it up.
On my website, I do have a table that has all the current plants, the existing plants, as well as the proposed and the under construction plants. And so the capacities, the time frame are all included in that table. But it is over 20. But off the top of my head, I don't have a hard number for you.
I pulled 31, but not all of them are up and running. So.
Yeah, but some of them are historically active, but no longer active. So you got to look at that chart with a little insight. So if there's any questions, I can definitely help.
I got 26 that have a volume listed for 2015.
I'm just curious, do you know what the average life of a gas plant is?
Well, the oldest facility would have been the Hess-Tioga plant, which I don't know, 1954. They underwent the major enhancements, and obviously it's just like any type of mechanical system. How it's maintained, how it's operated, it's going to dictate the life of that system, and so that's going to be that's going to differ by operator, how hard they run their equipment and what type of maintenance schedules they have in place. But they're not short-term investments by any means.
This might be more just for my general knowledge, but there used to be like a big gap between Brent and WTI oil price, and now that it's getting closer, usually Brent is global, correct, and WTI we look at as a national level. Why is that gap getting shorter? It might have been a question I asked a while back, I'm not sure, but and as such, I was talking to someone about how they usually predict gas prices based on the Brent, but now that's getting closer, he's like, it doesn't really, like now it's so close that you could go by either, and so I just wanted to ask you.
Right. So the question was the pricing between Brent and WTI, how that gets set, and why the difference. You'll see on the chart up on the screen on slide 5. Historically, if you go prior to 2011, Brent WTI were always hand in hand, within almost pennies of each other, and it really was never a discussion point at a meeting like this until 2011 came along, and we started to see those two price points separate. That was driven by supply and demand, and so Cushing, where WTI is priced, which is in Oklahoma, is a major pipeline hub. There was more crude oil coming into Cushing than there was the ability for it to move out, so it became oversupplied and prices started to decouple from the world oil price. And so that U.S. price suffered relative to the global markets, and that did not correct itself for a number of years until additional pipeline systems were built out of Cushing to go down to the Gulf Coast and to debottleneck and rebalance that supply-demand equation. So. So we expect it now that there's additional pipeline systems were built out of the Cushing area to the Gulf. more pipelines like Dakota Access now heading down towards the Gulf directly and bypassing Cushing altogether. So those are some of the solutions that were put in place to address that difference between those two price points.
Nothing on the webinar.
The Dakota Access, most of it's been approved now, the way I understand it. Has construction started in North Dakota?
To my understanding, so the question was, has construction started? My understanding is that it has not yet. I believe May is the target, the last information that I had seen on it. So I think there may have been some initial site prep or work that may have been done at some of the tank facilities themselves, but on the actual pipeline itself, no, not to my knowledge.
Might as well bring up sandpiper. What's the status of that?
I have not.
I didn't know.
Right, and so the question was on any updates on Sandpiper. No, there hasn't, to my knowledge, been any type of movement. The target date is still continuing to be that 2019 timeframe.
All right.
Okay, well, thank you very much.
Call it a webinar. Have a great weekend, everybody.